Good morning, everyone. I can see you all heading in. Welcome to this webinar. I am Anna from the Small Business Britain team. Delighted to welcome you all this morning to this webinar on inflation and rising costs and what you need to do. We are delighted to be joined by Catherine Erdly this morning. She's a Small Business Britain champion and founder of Resilient Retail Club, and she'll be taking you through this webinar this morning. And this is part of our webinar programme with the fantastic Lloyds Bank Academy, which is focused on offering support and expertise on everything from sales, finance, marketing and productivity hacks. The Lloyds Bank Academy is a completely free learning resource, so do head to their academy website, take full advantage of the free support and advice on there. Just a bit of housekeeping before we kick the webinar off. Do please get involved in the chat, say hello, introduce yourselves. But if you've got any questions for Catherine throughout the webinar, please do put them in the Q&A function at the bottom. You can see it probably at the bottom of your screen, and we'll go through as many as we can at the end of this session. So please do that. And don't worry, we are recording the session. We'll share it with you afterwards, as always, so you'll be able to watch it back to your heart's content. So over to you, Catherine. Please do take it away.
Thank you so much, Anna, and thank you, Small Business Britain, for having me as always. And of course, thank you to Lloyds Bank Academy for this session. I want to start off with a little bit of housekeeping. First of all, yeah, do please come into the chat, say hi, let me know. I'm just going to keep half an eye on the chat. Hello, Rhiannon, Margaret, Lisa, oh hi. Second time in 2 days. Yesterday, I talked yesterday as well. That's great. Kaylee, hi everybody. Yeah, so do come in and say hi, and make sure when you're in the chat, if you see there's a to section and you can select either everyone or hosts and panelists, make sure you've selected everyone. Hi Francesca, and that way everyone else can see your comments, and it's always nice to see a little bit of networking, small business networking going on in these webinars as well. Hello. And as Anna mentioned, there's the Q&A. It's so helpful if we have the chat for chatting and the Q&A for questions. It just means that we have got it's just easier to find them basically later on, a better chance of me being able to answer them for you. And just in terms of timing, I am going to talk for about 35-40 minutes, and then we'll have time for questions at the end. So we will do questions at the end, just because there's a few bits of information to go through, and personally I find it just flows a little bit easier if we wait till the end to do questions. But don't be shy, do ask them. There's no such thing as a stupid question. If you're thinking something and wondering it, then I can almost guarantee that somebody else is thinking the same thing as well. So don't be afraid to ask. Okay, very briefly, who am I? Why am I talking to you today? My name is Catherine Erdly. I'm a small business retail expert. As I said, Small Business Britain champion, which I've been doing now for about 18 months. I absolutely love it. So I deliver a number of different sessions and talks for Small Business Britain, and I'm going to be at the Small Business Britain Roadshow tomorrow in Norwich, which I'm very excited about. So if anyone's watching who's in Norfolk, then do come and see us, because it looks like an amazing day. This is my 22nd year in the retail industry. I spent 17 years working with corporate retailers, and then for the last 4 or 5 years I've been working exclusively with startup and independent retailers and brands. What are we going to be talking about today? Well, of course, this is a conversation that keeps coming up over and over again. The cost of living crisis, rising costs. It's a serious issue for a lot of business owners. And so what I'm just going to do, I'm going to touch on the current situation. I'm not going to go into it in too much detail, because I think we're all fairly aware of what's going on. And then the main focus for today's talk is going to be on 7 practical steps that you can take in this time of rising costs and inflation. And the emphasis is very much on the things that you can do yourself as a business owner, the things that you can look at. It hopefully will serve as something of a checklist. You may even find that you're doing some of these things already, which is fantastic. So maybe it will help reassure you that you're looking at the right things, but it may also cover some things that you hadn't thought of yet. And then we're just going to touch on looking ahead for the rest of the year as well. So what is happening? The factors that are impacting business at the moment, we've got inflation. So so retail and all businesses really, but we've got inflation at 9%. So it's, extremely high, and the Bank of England target rate for inflation is 2%. So clearly we're way above. If you look at any of the, I nearly shared one of the inflation graphs, and then I just felt like nobody really wanted to see that graph, so I didn't. Consumer confidence is at historic lows as well, because of the cost of living, all of these increases that are from fuel to utilities to food. Basically, every time you open the newspaper, that's all you hear about. And of course, that cost of living crisis is making people more considered in their spending. And looking ahead, the Bank of England outlook is that they believe that the inflation will continue to increase this year, although they are forecasting that it will even out next year, which is at least some positive. So what does this mean for businesses? Well, specifically then, again, I'm telling you what you already know, but just to kind of put it really in context and to make it as clear cut as possible what the challenges are. We've got higher variable costs. So if you have services or goods, then the cost of delivering those services or selling those goods has increased, which is impacting your gross profit. So just to let you know, throughout this presentation, I will be using the terms gross profit and net profit. Gross profit is your sales minus any costs related to making those sales. So your costs of goods sold, your costs of delivering the services, for example. Your net profits, which I'll also refer to, are your gross profits minus any fixed business costs as well, or other costs, so any other allowable business costs, basically. So gross profits, sales minus the cost of your sales. Net profits, your gross profits minus other allowable business expenses. And what's particularly difficult about this situation is that it's not just gross profits being impacted, so the cost of everything's going up, but your net profits are also being impacted because your costs of doing business are going up. So it's important when we talk about rising costs and inflation that we're looking at both elements there, not just one or just the other. And of course, as business owners, we've all got individual pressures on ourselves. So our own cost of living is increasing. And we also have to factor in the impact on sales because of lower consumer confidence. So all in all, it's pretty much what you might call a perfect storm when it comes to businesses, because you've got pressure coming on you from lots of different directions. But one of the key things that we have to do, easier said than done, I know, as business owners, is try and be as objective as possible, and is to try and deal with these different factors one at a time, and really understand the impact on our business so that we're able to, at least, I think knowledge is power. I think the key thing for me in this situation, when I was putting together this presentation and when I was looking at all the different things that we can do as business owners, the real key thing here is that knowledge is power. So everything that we're going to talk through in terms of the 7 steps, it's about really just like unpicking piece by piece what's going on in your business and how you can really just understand it, because when you understand it, you can come from a place of knowledge when you're making it, and then that's what gives you the strength to kind of move forward and identify what you need to work on. Okay, on to the 7 steps then. So the first one, which follows on from what I was saying, is to face facts. Is basically, if you haven't sat down and gone through everything to do with your gross profit, then now is an excellent time to do that, even if it's not the most comfortable reading. So let's start then with gross profit. And that's really about understanding how how everything breaks down on a cost per product basis or cost per service. So you want to recheck all of your profit margins. For every service that you deliver and for every product that you sell, you want to understand exactly how much profit you're making and what profit margin that is. Ideally, if you've done this previously, then you'll have an idea of what it was and what it is now. But if you haven't done it previously, it's a great time to start, because it's something that you need to watch really carefully. If you haven't done it in the last 2 or 3 months, I'd say, then it's something that's really important for you to take the time and to do so. The reason that it gets tricky for small businesses in particular to understand your gross margins is that a lot of the time you don't get like a single unit cost for something. It doesn't say like, you know, every time you cut someone's hair, this is how much it's going to cost you. You have to literally break it down yourself based on a number of different things. You need to go through all of your invoices, so you would understand how much everything's costing you for each element. For example, if you sell products, you probably get lots of different invoices for lots of different elements of those products. So you might get an invoice for your packaging, you might get an invoice for your postage costs at the end of each month. You might get another invoice from one of your suppliers for one element. You might have to then have an element where you're paying somebody by the hour to make up a product. So if you don't ever pull that all together and look at it specifically how it relates to one product or one service, all of the different elements that go into making that up, then it's harder for you to understand the gross profit margin per product and per service. And ultimately, that is really the building block of your business. So there's only one place that your business makes money. And that is, there's only one place where there's actually income coming in. And that's the difference between what you pay for something and what you sell it for. And that's true whether it's a product or a service. So that is basically the sort of building block, because everything else that happens, or your net margin, your net profits, they are directly impacted by your gross profit. So if you're not making enough money every time you make a sale to start off with, then everything else is just going to be so much harder. So this element is being eroded as well. As I said, this is a problem that's hitting your gross margin and your net margin. So start with your gross margin, make sure you're going through all of the expenses that relate to your product or service, and make sure that you're just 100% clear on what's happening and how that's shifted. Now, if you're somebody who, for example, buys lots and lots of products, this can be trickier, but it's something that you need to check before you place an order for something. Make sure that you're double checking all of these numbers, that you understand exactly what your profit looks like. So once you've done that, once you have effectively taken the time to go through all of your costs per item, per service, then you're in the position to start thinking about, okay, how can I review my pricing? Now, obviously we know that prices going up. There was recently a call, I was just reading some articles on the BBC recently where the cost of living czar was suggesting that businesses helpfully help keep prices low for to help with the cost of living crisis. But ultimately, at the moment, if you don't increase your prices, you are automatically having a pay cut. So without doing anything to look at your prices, you will naturally be taking less money into your business. And for most people, most small businesses do not have big fat profit margins that can really take that kind of erosion. So understand where you're at, and then you have to look at one of the first things to do then is look at your prices and just see what's possible. Now, when it says review your prices, it doesn't necessarily have to mean a blanket increase on everything. And you may have to do it. Reviewing your prices may be a process that you go through that is literally that you do it product by product or service by service or product type by product type, for example. So, and also just to put this into context, so one of the other things that I do is I'm a Forbes contributor, and each year I put together a piece on retail trends, which is really fantastic piece that I get to talk to loads of experts about. And back in last December, one of the people that I reach out to is the British Retail Consortium, which is the largest trade body really for retailers in the UK. And they were pretty clear that everyone's prices were going to have to go up. this year. So it was really just a question of how you were going to do it. So I don't think anybody is going to argue that against price increases, because it's just the reality for so many business owners. But as I said, increasing your prices doesn't have to be something necessarily that you do with every product. You may go through your products one by one, or your services, and you may find that, okay, yes, I think there's an opportunity here to maybe move it slightly. But then there are other things that you think, look, I just don't think I can touch this one. So look at your competitors. Again, this is something that I would suggest, if you haven't done in the last 2 to 3 months, I would look at your competitors again, because I've had a lot of conversations so far this year with people who say to me, there's just no way I can move my pricing because, this is just what the market price is for this product or this service. And then when we've actually gone back and looked at their most direct competitors, so not, find people who are similar to you, similar size, similar way of delivering their services, or similar way of making their products, for example, and look at what their prices are right now. Because a lot of people are finding that the market has actually shifted. And so, basically, even though they felt like, oh, there isn't room to increase prices, but actually when they've looked into it, they can see that prices have shifted across the board. So maybe their pricing, which was spot on 3 or 4 months ago, is now actually slightly below what other people are doing. So definitely check that before you decide that it's not a possibility for you. And as I said, identify any opportunities. Do you have something that, even if you can move things £1 here or £1 there, it doesn't have to be that you whack 10 quid on everything. Although I have worked previously, in my previous existence, I managed 3 major repricing exercises for retailers. And one of them, it almost was like, it's a big clothing retailer, but we did pretty much put like 5 or 10 quid on almost everything. That was back in the days when they changed the VAT rate, if anyone remembers back that far. So yeah, just look at, it doesn't have to be blanket. It can be very nuanced. It can be, okay, my bestseller, I really don't think there is room to move that. Or perhaps actually I'm going to tweak my bestseller because that's one that's going to have the biggest impact. But just have a look at your pricing and just see, is there any opportunity to move it? Once you've had a look at your pricing and made your decisions around that, and unfortunately, if you've done some price increases, you may possibly have to do another round as well. Again, if you think about the idea that if you run your profit margins almost at this point in time, almost like every 2 to 3 months, and checking your invoices and prices going up, you may have to do more than one pricing review. And then you decide on a communication strategy. So as I said, it's almost not as much an issue at the moment because almost everyone is expecting price increases. It's almost not worth commenting. I just feel like so many people are raising their prices at the moment that most customers are used to that idea. So I think that you still need to make some kind of decision. Do you tell people that it's coming up, that again, people have heard this message so many times, no one's going to be surprised and turn around and say, oh, this isn't possible, or why are you doing this? But ultimately, have a think about whether or not you want to say to people, okay, prices are increasing in 2 weeks. If you want to get it at this existing price, then buy now. Or whether or not you want to just do it and see if and not necessarily communicate it. As I said, those are 2 very valid approaches. Some people want to have that real open communication with their customer, and it can be quite a trust building exercise, talking about your transparency, talking about the increase of costs for you and people understanding that. But some people prefer to just do it, and in the very unlikely case of a fallout, let's say somebody says, I bought this from you last time and it was less money, how come it's gone up? Then you can have some kind of pre-prepared statement where you can say to them, thank you so much for your loyalty, due to pressure, have you read the news type thing, then prices are increasing, but to say thank you for being a repeat customer, here's a small discount off your next purchase, or something like that, to kind of smooth it over. And it's very, very, very rare that people actually need those. But at the same time, having that in the back of your mind can just really, really help with the psychological process of having to go through price increases, because it can be really hard and people can feel really conflicted about it, which I totally understand. But it's just one of those things, especially if you've had a really long, hard look at your gross profit margins, and it's clear that you have to do something to counteract your rising costs, then it may just be a fact of life. Okay, so price increases are most powerful when they're used in collaboration with a price, with an offering review as well. So this is probably, if I had to bet, and actually having been through this before, I mean, this is obviously an extreme situation with inflation at historic highs, but these conversations have been going on in businesses repeatedly over the last few years as overall prices have gone up, and we've had to deal with things like major shifts in cost price fluctuations after Brexit, or changes to the VAT rate where people had to decide if they swallowed that or passed it on to the customer. So it's definitely big businesses tend to spend a lot of their time, as well as doing all of their analysis on their gross profit margins, they also spend a lot of their time and energy on this, what can you tweak? And one of the clearest examples I always think of these kind of thought process and people doing this is when you look at food. So shrinkflation, I don't know if anyone's heard of shrinkflation. Shrinkflation is one of those, it's the tendency of food manufacturers to keep their prices the same, but they decrease the amount of product in a packet. So you may still pay £1 for a packet of crisps, but now it's reduced number of grams. One of the biggest examples of this was, I don't know if anyone remembers the Brexit Toblerone, but Toblerone had done this where they'd taken the traditional Toblerone with its triangles, and then they'd sort of put dips in between the triangles to reduce the amount of chocolate that they were using. So big businesses will be spending, there's probably, I'm guessing, where a lot of their thought process is going on right now in terms of how can we play around with the product or service. One of the things to really identify, and one conversation that could be really tough to have with yourself as a business owner, but just thinking about, are there now products or services that are just no longer viable, they're no longer profitable? If they're outside of your core offering, can you still offer them, or do you have to kind of cut it back to the things that are still reasonably profitable for you, or are still profitable for you? Are there any opportunities to offer entry-level offerings? So, use the word offer too many times in that sentence. But the customer is obviously more considered. So a lot of, again, looking at the way big businesses do it, they'll always have a price architecture. So they'll have an entry-level price point, a mid and an upper. So when you look at your offerings, is there anything that you can offer that is maybe, it's again like if you offer a service, can you offer a simpler version of that service for a lower price point that is something that is still profitable for you, but maybe is an option for a customer that doesn't have the budget for the higher price at this moment? So what tweaks can you make? The other thing to think about is what tweaks can you make to your products or services? Now, the key thing that makes this so difficult is really not compromising your business values and your quality. So obviously, if you are well known for the quality of your fabric that you use in your products, then downgrading to a cheaper fabric is really, that's a kind of really tough gamble to take. But for example, in hospitality, which again is another, hospitality is very difficult at the moment, but they've been looking at things like, is it always salmon on the menu, or is it trout, which is less expensive? In the fashion industry, this has been happening. I mean, they've been doing this gradually over time, to be honest. So it used to be you could get a pure silk dress, and then it turns into silk blends, and then it turns into poly blends, and basically that was them playing around with what they can tweak. So it's just worth having a think about it. Is there anything that you can do, again, without compromising the reputation that you've built up, which is almost the most valuable thing that you've got as a small business owner? So you don't want to compromise your reputation, but especially if you've done the work to really dig into your gross profit margins, is there anything that you can tweak that will help your profitability and not be as noticeable to the customer? And then equally because for example, you may be watching this and thinking there just isn't any room to increase on my pricing, I just am absolutely capped. But again, it's like, could you tweak then what you're offering? Or could you alternatively, as I said, come up with a simpler version of something that you offer in terms of, then it's a different price point, which means that a customer that maybe isn't able to afford the full package or the full product, they've got another option as well. And then the final point really here is, which is kind of all still in the reviewing stage, is where is there any trapped cash in your business? So for product businesses, this is probably slightly easy to identify because this is where is there stock that isn't selling. Whenever you think about your stock, if you think about it instead of the actual stock, think about it as the money that it represents. So for example, if I've got this glass here and this actually a £5 glass, if you imagine that as I'm assuming that you're selling this glass, not that you're using it in your restaurant, for example, that's slightly different. But if that was £5, and then you think about that as a £5 note, and then look around your business and think about, is there anywhere that there's money trapped? Is there anything that I need to think about when we come a little bit later to talk about future plans? Is that something you need to target? Is there anything basically that is sitting there that has some value to it that you could, when I say liquidate, it sounds really like bargain basement. That's not it. It's moving it from stock inventory into cash. Basically help with your cash flow as well. So lots to think about there in terms of reviewing your products or services, and doing what you can to think about what you could do differently. Review fixed costs. So number 4, moving on to the net profit. I think I should also say at this point, I really want to point out that I appreciate that none of this is easy, and I do appreciate that many people will have made some start on this or maybe be doing more than that. But it's, again, going back to this idea of taking the time to go through it, being clear of what are all the different things that you can look at, and making sure that you are looking into it as much detail as possible, because really, as I said before, knowledge is power. So reviewing your fixed costs, again, this is then looking at any ways that you can improve your net margin. Again, this is probably something, I think, from talking to a lot of business owners, this is where a lot of people start. So going through things like really practical exercise, just printing out your bank statement, and looking at it with a highlighter pen and going through every direct debit or every payment that comes out, basically, and highlighting whether or not that's something that you absolutely have to have, or if it's a nice to have. So a lot of the nice to have versus have to have. One of the things that obviously tricky decisions that they have to make, things like if you outsource any services or anything that you can do DIY or even pause for a moment. What can you do to bring down your fixed costs? Staff is obviously a really big cost for most businesses. So having a look at staff productivity, have you looked at for each team member what they're generating, basically, and at least as you move forward and you're looking at things like your sales plans, having a really clear idea of what kind of sales you need to generate to almost cover the cost of different staff members. So making sure that you're going through it and reviewing every single one of your fixed costs. But as I said, my experience really here with a lot of businesses, this is the point this is the bit that they start with. And also, I'd say one of the things that previously you might have said is like shop around for different alternatives, but I think that that's possibly less, well, maybe in the whole bringing it in-house versus outsourcing, that might be an option. But I do think that this is a place where obviously prices are up across the board, so it's not necessarily like there's going to be a silver bullet where you're just going to suddenly find a much cheaper energy supplier, unfortunately. Okay, so number 5 then is knowing your break even. So this is a combination of knowing what your gross profit margin is, your profits per product, and then also knowing very clearly what your fixed costs are, obviously having done the exercise of if there's anything that you can remove, but then really understanding, if you look at your current overheads and your current profit margin, what is your break-even point each month? So how many sales do you have to take in order to cover your costs? Again, some people are really hot on this and they'll already know it. They'll have it on a post-it note on their computer screen. Other people, this is not something that they would be looking at on a regular basis. But if it's not something you've calculated before, I really strongly recommend it, because I think it helps you just have a really, really clear idea of basically the costs base that you have as a business compared to your revenue, how the two things are related, and really what the situation is. So as if things change, you can understand what that means for your sales. And if things change with your cost base, that helps you understand what that means for your sales, and then vice versa. It's also really important to monitor this on a monthly basis, to be able to say this is what it should be, and then each month see what happened. To be honest, by far the easiest way to do this is if you've got an accountancy software that you use, Xero, QuickBooks, or one of the many alternatives, and preferably a supported accountant. I'll talk a little bit more about this later when it comes to getting more support, but I really think that especially at times like this, then having an accountant who can help you with this, if it's not something that is one of your strong suit, it's just really, really helpful to be able to understand. There's so many different things going on in a business. There's so many different elements to it that just to almost boil it down to that one number, I need to take X each month to break even, can be really, really helpful. Doesn't mean it's not always nerve-wracking, but it's just really clear, and it can help you get really clear on what you need to do, and basically the sort of underlying dynamics of the business. Okay, and then once you've got that break even as well, it just helps you really switch your focus onto sales. Obviously, in an era of inflation and rising costs, and then a lot of people have also seen that softening of consumer demand, and certainly softening of consumer confidence. So it's thinking about to what extent can you really push yourself to experiment and diversify. As Lisa mentioned at the beginning, I did a talk yesterday specifically for product businesses, and I was talking about the product businesses that I've seen that have continued to flourish in 2022. And one of the key things there has been about this experimentation and diversifying when it comes to not just sales messaging, but also their sales channels and also their marketing methods as well. So I think, again, going back to this idea of knowledge is power, that if you can tie that into, this is how much I need to take to break even, therefore I can set myself targets that at least represent that. You may even want to have a couple of different plans, like the absolute, this is the minimum that it needs to be, this is what I would like it to be, and this is what I'd be delighted if it was. So you've almost got this kind of range that you can understand, is this what you like? If at all possible, it's really helpful to set targets by month. In an ideal world, set targets by month that are reflective on the seasonality of your business. A lot of people will be slower in the summer. That happens every year. Doesn't mean it's not nerve-wracking, but then it's all to play for more in the autumn, and you know, people are spending more, especially if you've got giftable items or services, they'll be spending more around Christmas. So having a sales plan that reflects how your business trades naturally seasonally, as well as reflects how much you need to make to break even, then helps you really have a clear plan of what you need to do, and then you can start putting all of your, basically your focus on that, on pushing to meet those goals. And then the other part of that too is that one of the things that a lot of people will do is say, okay, well, if I've got trapped cash, so for example, for product businesses, if I have inventory that I'm sitting on that's not moving, that's slower, then part of my sales plan might be a seconds and samples sale, or a kind of studio clearance, or what can I do to both boost my sales as well as target your trapped cash. And then the final one then that I wanted to touch on is just, again, like trying to get support. Don't feel like you have to do this alone. I really think, again, going back to your accountant, it's having a really good small business accountant that supports you is really, really important as a business owner, because they will help guide and navigate you. They'll help you understand any potential tax efficiencies that might be available to you. And also, if again, some people are totally on top of all of this and they understand what their break even is, other people will need some support doing that. And again, a good accountant should help you be able to at least piece that together. Of course, we have things like Lloyds Bank Academy, which is a huge amount of resources for small businesses, and Small Business Britain constantly have webinars, talks. Their Facebook page is very supportive, lots of small businesses there as well. So I think one of the key things here is that if you take nothing else away from today, that you're not alone. There isn't, unfortunately, a magic wand solution, but there is just you digging into the detail and looking at what you can do as a business owner, and finding places where you can get support, maybe bounce ideas off people who are going through the same thing, because everybody is going through the same thing right now. Every business, from the tiniest startup to the biggest retailer or the biggest multinational business, they're all going through the same challenges, and they will all be doing a variation of these steps, between looking at their gross margin, between looking at what they can offer customers, between looking at their fixed costs and what they can do with those, and everybody's kind of navigating their way through it. So don't feel like you're alone. Don't feel like this is something that's only happening to you and the struggle that you're having. It's definitely something that is universal across all businesses. So see what you can do to reach out, get support, and yeah, don't feel like you're alone. And then this slide here, this is what I refer to as the cycle of doom. So this is just touching on the importance of getting that support and staying in that, I don't want to say like a positive mindset, because I do feel like at the moment there's obviously a lot going on, but I think that action focused mindset, if you can stay focused on what you can do, on the factors that you can control as opposed to everything else, then it avoids getting in this mindset. Because for a small business, especially when you're the owner, you may even be the only employee, it can be very easy to get in your head. And so if sales slow down, then you lose confidence, and then you're also looking at your costs increasing, and it just feels very tricky. So you take less action, so sales slow down, so you lose confidence, and so on and so forth. And then you're in the cycle of doom. So try as very much as possible. Again, I'm saying this knowing that this is easier said than done, to focus in on the things that you can control, look at all of the different elements that are within your grasp, and know your numbers. So which is, I preempted my own slide. So focus on what you can control, look at your gross profit margin, look at your pricing, look at your offering, review all your fixed costs, understand what your break-even point is for your business, make sure you've got a sales plan. Don't do this alone. Focus on what you can control. And of course, going towards the end of the year is the big selling period. So even if people are spending less sort of on their discretionary or their impulse spending now, I do believe they will still be purchasing at Christmas. So if there's anything that you need to do in your business almost to prepare for that, then this is a great time of year. The summer's always a really good time of year to be thinking about Christmas. So this is me, if you want to come say hi. And have we got any questions?
Sure, pop back for the Q&A. That was fabulous. Thank you, Catherine. And we do have some questions that popped up in the Q&A and also in the chat. We had a question from Sean. He asked, how do we balance raising prices but with a reduction in customer spend?
Yeah, I mean, I think that's it is definitely, well, I think there's a few things. I think that people will, I think the key really here is focusing in on your customer and and really understanding what gets them to buy. So one of the things I often say is that when you're persuading somebody to buy, it's like they've got their money in their palm of their hand, and you have to persuade them to open their hand and give it to you, right? And at times like this, the customer's it's like they've got their money held really tight, and so you have to maybe do more to convince them to open their hand. Prices, if you're tweaking your prices, so let's say, for example, you sell something for £27 and you move it to £29, that £2 is unlikely to really make that much significant difference. If somebody's in the market for buying a t-shirt, for example, and they would be spending £27, it's unlikely that it being £29 is going to put them off. So part of when you're reviewing your prices is you're kind of looking for those, especially where it's under those psychological barriers. So pricing barriers, there's £5, £10, 15, 25, 50, 100, 250, 500. They're kind of in the customer's head, it shifts it into a different category. So if you're, for example, at £47 and you move to 49, that's less likely to have an impact than if you say we're a 49 and move to 51. So sometimes, because you cross that psychological barrier, so sometimes when you're looking at your pricing, you kind of almost like, one of the things that you're doing is like edging them up where it's less noticeable. But ultimately, it's not always true that if you increase your prices, the customers will buy less, especially if you look at your pricing and you realize you're actually slightly below the market. It's equally not necessarily true that if your prices are lower, the customer will buy more, and then you're just making less profit per sale, and things like your net margin then becomes under a lot more pressure, because every sale generates expenses, and that's not necessarily the best way to go either. So I would say that I wouldn't equate the two things. That definitely, if you put your prices up, people will spend less. I think that it's really about knowing your customer, knowing your messaging, knowing that your product or service is absolutely tuned into what they want, not just what they want in general, but what they want right now, as in on the 30th of June 2022. What are they thinking about? And being able to demonstrate to them why it's great for them. I feel like that was a very long woolly answer. So I guess what I'm trying to say is that the two things are not necessarily it's not a slam dunk that if you increase your prices, then people buy less. There's a lot more to it than that, I think.
Cool, thank you. Michelle has asked, hi, I make custom cakes and sometimes provide quotations for events between 6 months and a year in advance. How can I account for future rise in costs?
Oh, that's a really good question. I always like to look at worst case scenario. So if you look back 6 months and you look at your costs and they've increased, almost you say to yourself, right, well, if that happened again or even more, then this is approximately what I think my costs will be in 6 months to a year. And you kind of build it up that way. So always overestimate what your costs will be and the hope that it will be better than you think it will be. But it's definitely something, again, this happens all the time in big businesses too. They have to do things like hedge what their exchange rates are going to be when they're purchasing things in. And the way that they manage it is that they always go for like, okay, this is the sort of the top end of what I think it could be, and I'm going to build my costing off that, not what it might not like what it is now, if that makes sense.
We've got another question which is similar kind of topic, kind of planning in advance, and yes. I'm hoping you're going to read this out properly because it's quite confusing, so it might be best to read it. But Joanna's asked, I'm currently quoting for wedding floristry for 2023 and 2024. I have the following in my T&Cs, but this is already out of date. Any suggestions, please? Inflation rises above 5%. A revised proposal will be supplied 2 months prior to your wedding date based on the increase in inflation over and above 5%. Does that make, I don't know if I've read that properly, i.e. if inflation increased by 5%. I hope I've done that question justice by reading it out.
Yeah, so you're saying to them, this is the quote, but if inflation is really high, then I'm going to have to re-quote you. I mean, I think that I think that potentially I think that's reasonable. It makes a lot of sense. I don't know if you have to do you have to state at what period inflation would be above 5%. Do you know what I mean? Like, is it if it ever got above 5% or if it was over 5% for a certain amount of time? But I think that that's fine. I think, obviously in an ideal circumstance, you'd never have to re-quote them. You could almost try building a bit more into the pricing in the hope that you wouldn't have to re-quote. Or I think what you've got there sounds fine, or people are aware of it, or you have to increase your prices more and then say if it goes above 10% I'm going to have to re-quote. Do you see what I mean? So they're going to expect you to build in a certain level of inflation based on what we're currently seeing, but I think the more that you can do to kind of hedge your future prices and not have to re-quote, the better. But no, I mean, it makes sense. There's only so much you can do.
Sarah's asked, now she says on the same topic, and I'm not sure if this was something we were chatting about probably about 5 minutes ago. She said, do you think this stands when a customer has to buy a month's worth of classes or a block session? Should I move all my customers to monthly payments on this basis to make it more affordable for them, easier cash flow for me, but no flexibility if they can't attend?
I think that, can you give them the option? Because that definitely would help with their cash flow. If they currently buy blocks, but they could pay monthly. I wonder if you can just offer it as an option. Do you have to move everybody, or could you create a new option for them, which might make it easier for them, easier for you, but it's not like you have to move everybody, if that makes sense.
So keeping it like flexible for them and you as well.
Yeah, you could always introduce a new option. As well, I'm assuming you can. I don't know. It depends on I'm presuming it depends on your software that you're using. But or do a bit of customer research. Would they be open to that? I just think it just makes me slightly nervous if you're moving like everybody, whether they like it or not. If that makes sense.
Right, we've had a few questions in the chat as well. Matthew said, I do regular sales to move stock, but they seem hit and miss in terms of the headline discount figure. Even at 50% off, which would make some big ticket items really attractive, this hasn't moved people to buy. Also, I don't want to appear to have discounts all the time. Any ideas?
Yeah, I mean, I think that it depends how regular your sales are. I would really, I recommend for sales that you treat them like a big launch in the way that you market them and you think about them and you build up momentum towards them. But then you maybe have them twice a year, 4 times a year, maybe maximum. But then when you're getting ready to when you're kind of building up to a sale, that you really hype it and you put your focus on it and you make it as really sort of think about this, when retailers, high street retailers have sales, they literally block out like the entire window of the shop with a big red sale banner. Like, it's that kind of thing. You really want it to get people's attention. So I wonder, as I said, I don't know what you mean specifically by regular, but is it almost like you do fewer of them, but that you really make a big deal about it, and then you just have to often you may, if you really are treating it as like, this is to get the stock out of the door. We always used to have a phrase like everything has a price. So you start with one discount and then maybe as you go through the sale, you review it. And if there are things that are sticking, you may have to take deeper discounts, but then you're communicating that to your customer, new lines added or further reductions. I think if you make them really focused, but fairly rare, then they have more of an impact, if that makes sense, than if they're more often but not as not as much of a sort of make a big stink about it, for want of a better phrase.
It's true though, isn't it? I kind of think if you see something that's on sale all the time, you're likely to trust it, aren't you? So like, well, if you're on sale all the time, then
you almost want like a couple of weeks where you just literally like, we're on sale, like and then everything's about that, and that's what you're really, really focusing on for a couple of weeks, but it's not all the time. So your customer's like, oh my goodness, they're on sale, okay, let's go and have a look. It's like it's something exciting happening, as opposed to
It's like a psychological thing almost, getting them to buy.
Well, it's like, I think the perfect example of that is the Gap. I mean, it used to be that you would go in there all the time and they would be like 40% off, and you just think, well, I'm never going to buy anything full price. And we've all got businesses that we know are like that there's no point buying from them at full price, because at some point it'll be discounted. But I don't think a stock clearance sale, when it's done, it's sort of every, what's to say, like twice, maybe 4 times a year, I don't think that comes across like that, because customers understand this isn't some gimmick. This is literally, this stock is being cleared, so let's go.
Yeah. Understood. So Heather asked, and I think this was in relation to some of the entry-level offering you were talking about earlier on in the webinar. She asked, would an entry-level offering, for example, be like an introductory course? I assume that her business is surrounding kind of offering courses, so would that be an example of an entry-level offering?
Yeah, it could be, definitely. And I think in general it's often really good, especially when you're talking about something like courses or services, where it is about people, really about building trust. Like if it's an introductory course, that could even work even when times aren't as tough as they are now, for example, because it allows people to dip their toe in to really experience working with you in a smaller way than before they've had to make a major commitment. But yeah, absolutely, it could be.
We've had some, just quickly, I can see some questions asking if this is going to be recorded. Yes, it is being recorded, and you will be sent the link afterwards, so don't worry, you'll be able to watch everything back. I think everyone's really enjoying it, Catherine. They don't want to miss anything. So I just it is being recorded, don't worry. Nanette in the Q&A has made some interesting suggestions, comments. She said, we could play with what the big boys do in retail, shrinkflation, i.e. smaller portions in a package, but for the same price. Reputational risk, though, potentially. What are your thoughts on that, Catherine?
Yeah, I mean, it's I think it's a question, a lot of this is experimentation, and also knowing your customer. As I said, I wouldn't risk your reputation, but if you think there's, are there small tweaks that you can make, or like almost, or even like, it's almost like you need to have a focus group where you can get people in and offer them coffee and cake, and almost like show them the packages and say, like, what's the difference between these two? Can you see? Do you see what I mean? Like, or how noticeable is it? Or even see if they pick it up, because sometimes things that we're hyper focused on as business owners are just completely not noticed by our customers. But obviously that is something you need to kind of take into account. How noticeable would it be for your customers? And you're the best person who's placed to say that. But as I said, you could experiment with it, and you could try a little focus group.
Well, that's kind of like the beauty of small business, isn't it? We've got the opportunity to kind of try things really fast, see what works, rather than kind of having to go through so much process.
Exactly.
Nanette's also said this could be an opportunity, this is kind of what we're mentioning, an opportunity to reconsider the range you're selling, manage out the poorer performers anyway, to introduce something new, innovative, cheaper, and attractive to customers.
Yes, yeah, for sure. Yeah, and I think the key thing here really is that it's this black and white thinking that we're all guilty of doing, where people say, right, people aren't buying anymore, and actually people are spending money, for sure. If you looked at the May spending figures, then there's slight decreases, and we're talking about like 2-3% decreases in some product areas. And so it can feel like, oh my goodness, nobody's buying anything. But there are businesses that are selling. There are always, during recessions, during tough times, there are always businesses that really kind of key into what their customer wants and still manage to do well. And I think that people are just being much more considered. I think they are spending, but they are just thinking about it a lot more. So again, as it's that whole idea about not getting stuck in the cycle of doom is about saying, okay, well, what can I do? Like, what can I do to key into my customer? What does my customer want right now? Is my offering still correct? Do I need to tweak it? And as Nanette said, like, what's new, what's innovative, what's perfect for them right now, and how can I keep offering them what they want?
Brigitte in the Q&A has asked, so I think this is just on the topic of what we're talking about, RE sales, what about luxury items? Are they not on the downside? I assume she means kind of, are they not being bought as much? But
so luxury's it's a really fascinating market. I think that and you know, it kind of depends. There's luxury and there's luxury. There's a lot of people who feel like if you're at the value end or at the luxury end, it's actually almost in a way not easier, because nothing's easy, but it's the people who was like slap bang in the middle that it's almost the hardest. I think with luxury, again, it comes back to this idea of really selling the value of what you're selling. So a higher price point, but explaining why it's a higher price point. There will still be people who've got, if you're already in the luxury market, then your customer already has the disposable income to buy from you. They are possibly even more insulated from the impact of cost of living crisis than other areas of demographic. It doesn't mean that it's going to be necessarily any easier to sell to them. I think you still have to very much focus on what they want right now and persuading them of the value of what you're selling. But then it's really about selling them the quality, selling them what is the luxury element of it. What makes it luxury? Is it the way it's if it's a service, is it the way it's delivered or the way it makes them feel? If it's a product, is it the quality of the materials that go into it and the way that it's manufactured? So what is it that makes it that luxury item? I don't think that luxury is necessarily any more impacted than any other sector. That's my general feeling about it.
So maybe it's an opportunity to look at kind of maybe a different way of marketing it and
kind
of new customers and that.
Yeah. And I know people have said to me, one of the questions that comes up is like, I just feel really guilty about selling luxury products at a time like this. But ultimately, there are always going to be people who have got the budget, and there are going to be people who really want to buy something lovely for a loved one or potentially treat themselves. And it's the key thing here is not making the customer's decision for them. Let them decide if they want to buy it, not you decide that they don't want to buy it and not selling it, if that makes sense.
Yeah, definitely. Sean has asked, is there a recommended guide for these steps? So more detail on how to review costs and how to set targets for a sales plan.
I do, well, for product businesses, I do a lot of this stuff. So I have my membership group, the Resilient Retail Club, and I've got a lot of courses in there that go into this in a lot more detail. In terms of for service-based businesses, I don't know, you don't know if Small Business Britain has, I don't know, I mean, it's very, it would be specific steps for going through it all, I guess. I don't think I've got anything that I could, I'm trying to think if I've got anything I can send over, but I don't think I do.
Well, everyone will be also receiving, like I said, recording of this webinar. So if it makes sense after Sean to kind of follow it like a step-by-step, that could be helpful as well once you've got it in front of you. And Sharina's asked, will there be a recording available? Yes, there will. Don't worry, Sharina. It will be sent to you afterwards, so you can take notes as well. I can't see any more questions, so speak now if you've got one, because I can't see any more. But thank you so much, Catherine. I can see that's been a really informative session for everybody, and everyone seems to have really enjoyed it. So thank you so much.
Thank you so much. And and if you have any questions, come over and see me on Instagram at Resilient Retail Club, and I'm always happy to answer.
Yes, and I'm sure we'll be seeing you doing another webinar soon on another.
Absolutely, I'm back in a couple of weeks, I think. So
and I'll be seeing you tomorrow.
I'll see you in Norwich tomorrow.
Fabulous. Okay, thank you. Thanks, guys, and thanks for coming. Bye.